Hey everyone, welcome back to the channel. Today we're breaking down the Australian stock market after the ASX 200 posted a small but positive close, giving traders and investors something to chew on after a rough patch in recent weeks. The headline number first, the S&P ASX 200 finished the session around 8,650, up roughly 0.3% on the day. It opened near 8,620 and traded in a relatively tight range between about 8,600 and 8,680. So this wasn't a big index exploding move, more of a quiet, steady bounce. Over the last month, the index has pulled back a few percent from its February highs, but it's still up close to 9–10% over the past year. That means today's move is less about a major breakout and more like a reload after a correction. What's driving the market right now? The biggest story on the domestic side is the RBA's recent rate hikes. The cash rate now sits at 4.1% after two consecutive 25 basis point moves, and that's creating a mixed picture for different parts of the market. Higher rates tend to support bank margins, which is good for financials, but they can weigh on high-growth, rate-sensitive sectors like tech and some defensives. Globally, things were also on the softer side of positive. U.S. indices like the S&P 500 and NASDAQ finished higher overnight, giving the ASX a slightly risk-on opening tone. So today's move feels like a classic relief rally. A bit of buying where traders are comfortable stepping back in after recent selling. If you want to zoom in deeper, sectors told a clear story. Banks and financials were the clear winners of the day. Most of the big lenders were up anywhere from 1% to 2%, with the RBA hike lifting expectations for net interest margins. That made financials one of the main engines behind the index's gain. Mining and energy stocks were right behind, with companies like BHP, Rio Tinto, and Fortescue all in the green, alongside energy names like Woodside and Santos. Firmer iron ore, oil and gas prices gave the rally an extra leg. And cyclicals like resources and energy were in the spotlight again. On the other side of the ledger, tech and growth names were more mixed. Some small-cap and mid-cap tech plays caught a bounce, but many of the big-cap tech stocks stayed flat or slightly down. Higher rates and ongoing valuation concerns are still a headwind here, so any buying in tech has been more selective rather than broad-based. Defensives like utilities and staples were also relative laggards today. Money continues to rotate out of safe haven, low-beta names and into banks, miners, and energy, which tells you that the current mood is still tilted towards cyclicals rather than safety. If you look beyond the big-cap names, market breadth was actually quite healthy. More than 70% of ASX 200 constituents finished the session in positive territory, which means today's rally wasn't just about a handful of heavyweights. Volume was also above recent averages, especially in mid-cap miners and some smaller energy names. So you saw real participation rather than a quiet, sleepy close. That's a good sign if you're watching for a broader base to the recovery, even if the index move itself looked modest on screen. So what does this mean for traders and investors going forward? The ASX 200 is clearly off its recent lows and out of immediate panic mode, but it's still trading below its February highs in a choppy environment. If the RBA keeps a relatively hawkish tone and rate cuts stay on the back burner, financials and resources could remain in favor, while high-yield defensives and stretch tech may stay under pressure. On the flip side, any talk of earlier-than-expected easing could flip that script pretty quickly. If you found this wrap useful, make sure to hit the like button, subscribe to the channel, and ring the bell, so you don't miss our next market breakdown. Drop a comment letting me know which ASX 200 level you're watching next, whether you're bullish, bearish, or just waiting for a clearer signal. Until then, stay sharp, manage your risk, and we'll see you in the next one.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.